Hey, it's the Ambassador. 8 o'clock. Emerging markets trading down off of another reserve ratio hike in China, another 50 bips, joining in the chorus of Asian central banks for sure, and Brazil for sure, where you're seeing central banks doing everything from actually raising underlying rates, repo rates, raising reserve ratio requirements. But in the last week or so, we've had everybody from Malaysia, Thailand, Korea, and India raising rates, and you've got India scheduled to do another hike later on. So we know about the inflation story. The real ultimate test is going to be where there remain policy issues in local markets that actually begin to get bogged down, and ultimately the concerns for local price pressures on food and some of the social netting that is the biggest issue for all of these countries. You have to watch that. But in the short time, I actually think you need to watch India as an opportunity here. 17% pullback when you include local currency terms. The Sensex somewhere around 18,000 looks like a buy. We've got a good note about it, a trading note on the site this morning. If you look at some of the other news, the big key remains what type of fund flows are hanging in the background. We saw huge allocations this week, and I think while a lot of this was commodity related, the EM asset flow story is very much alive and something you need to watch. So bit of a pullback today in Turkey and Russia. Turkey is another one of these markets where we saw opportunity going into the last few weeks of the year. We remain bullish on the opportunity, and in fact, I think the markets need to get through a little bit of the froth related to, again, a central bank that people think has been overly dovish and needs to start to begin to hike rates. So for now, I'd say in a relatively quiet macro environment, people are actually going to watch the inflation numbers in the States because they seem to be the only people that don't realize that there's an inflation problem. Everybody from Trichet in Europe to obviously all the people we just talked about in the emerging world, very concerned. If the U.S. ever starts to acknowledge core inflation, they obviously acknowledge food and energy price issues, but only concern themselves with an output gap that remains wide enough that the U.S. inflation is not even on the radar screen, you're in a pretty good place. And I've talked about this many times. A rising 5-year note environment in the States is something that actually is relatively bullish for emerging stocks. So keep an eye on that. The Dixie's a little stronger today, and after a 2% move over the last couple of days, weaker, and the euro strengthening 3.7%. All of this was overdone. I still think we're in a place where the big macro trades that are the dollar Swiss, dollar yen, are moving in the opposite direction from what had been the long-term trend. So dollar strengthening against Swissy, dollar strengthening against the yen. Good for Japan, good for the world, not necessarily good for the U.S., although I don't think the U.S. can totally deflate itself out of the current economic situation. Thanks a lot.